I think we're still highly underserved in this market.
On a scale of 0 to 10, in tech sophistication, we are at 8 out of 10. In business model sophistication, we are probably at -1 out of 10. And that's because we built a business model and we have made the country Group 1. Right? And now we're trying to recover from Group 1. But I think there's been over-obsession across the ecosystem on payments as a technicality. Right? The reality is payments is something you need. How do you integrate that into a holistic solution? And like Sanjay said, you start seeing vertical solutions, right, which provide holistic solutions for a use case. The consumer behavior is now start moving more rapidly than we've seen in the past. People are getting more comfortable kind of themselves operating across. All our lending portfolio companies in Indonesia are P2P.
Oh, really?
Because that is the license that you have as fintech lender, and the whole ecosystem has developed around it.
Credit on UPI is
or the most hyped.
So I think, look, it's been quite an up and down year at different levels. If you think about it, whether it's in how the public markets have reacted to several of these companies, both globally and in India, the type of new investments we're seeing, how some of the mature investments have progressed over the year. I think the overarching thing across the board, whether it is fintech or otherwise, has been a strong focus on the move towards building, sustainable and profitable businesses. Very thankfully, a lot of focus on unit economics, focus on making sure whether it's in the lending business where you're keeping your NPAs under control, whether your CAC is under control, sustainable growth, getting companies to perhaps focus less on growth at all costs, and more the focus has been on profitability or getting towards profitability. Companies assuming that the money they have is the last money they're going to get before they get to the next level, and then perhaps raise again for the next phase of growth. So it's been quite a, I would say, solidification of the change in culture and mindset that happened in 2022. And I think I'm glad to say that at an ecosystem level, a lot of companies have been very realistic about where we are going at a macro and have adapted very well. So of course, we can dive into what are payments companies doing, what's the regulator been doing, what are the lending companies doing, what are the investment companies doing, and all of these at a tactical, at a more granular level. But I think across the board, this is the overarching theme. One last thing I'll also add is, even if you look at a stock like Paytm, after it sort of, had a, debatable pricing of the IPO and, took a lot of beating in the public markets right after that, has rebounded very strongly, right? And is now sort of very healthily marked up, and the growth of the business has been very strong. The two big private sector guys, whether it's PhonePe, Cred, and Razorpay, I think all three of them have also been quite healthy. So overall, very good signs here. I'll pause and let Ganesh chip in with some thoughts as well.
Thanks, Sanjay. So maybe I'll, Sanjay covered obviously the specifics of the market quite well. So maybe I'll add perspective from a macro point of view, what we are seeing. I guess taking the point Sanjay made on companies evolving and realizing the shift the significant shift in their approach to life. I think for a long time, we have tolerated companies which had tech stack cost structure, calling it fintech, but monetization was largely classical financial services. But we had tech stacks which had very heavy fixed cost structures. And while capital was easy and flowing, it's possible to keep that going for a while. You can keep up the mirage of I'm building something transformational, so I should be given more of a leeway. I think all that came to a halt in the last 12 months. And every company is being questioned on, or every meaningful company with the right kind of shareholders around the table and founders is being questioned on how long of a leash do you have to keep this going, and when is this going to converge? We are seeing that across models, and I think it's a very healthy sign for the ecosystem. To the point that Sanjay made, the predecessor of this was a generation where new fintech models were being built like e-commerce companies. And that was a super unhealthy, where literally we have seen, exorbitant acquisition costs, the kind of discounts and customer acquisition strategies, which were really applied in e-commerce, where you had deep pockets to go on for a long time, We went through that generation and we landed up here where there was a gap between the revenue and the cost structures. Now that is kind of getting rationalized to some extent. Frankly, those who don't rationalize will not survive. They will not survive, right? And that is the reality of where we are. And that means some very harsh decisions about people, about business, about founders. And that has led to a fair bit of a big mental test for the ecosystem as a whole, right? Whether it's investors, whether it's founders, whether it's ecosystem players and partners, I think this is a test of mind. And several people will break down. They will not be able to handle this. This is not for the faint-hearted. And 23 has been really, a very, I would say, disturbing trailer on that front for several cases. And I think we really need to figure out how companies tide past this. The one more maybe quick dimension I'll mention before we move on is on the regulatory front. Right, I think it has been, as Sanjay started by saying that it's been up and down here. It's very true. On some fronts, I'm quite excited to see the regulator engage and take fintechs, fintech as a systemically important space now, right? And it can't be ignored. Whether it's lending, credit, banking, or embedded finance, wealth, etc. On the other side, and this is by the way true across the world, and maybe given we have this global vantage point, I'll tell you one thing we have learned in the last couple of years is regulators engage with each other way more than the ecosystem realizes. And way more than we realize, very similar regulatory trends, very similar thoughts, very similar concerns. It's happening a lot more actively than we probably realize from where we all sit. But the result of that is there is some positive movement in some markets where regulators have learned from maturity of certain markets, whether it's a UPI framework, digital ID framework, PIX framework in Brazil, etc. The flip side of that is obviously the interplay of tech, finance, and that in the context of non-financial platforms. This is a little bit more nuanced and complicated, and it is not obvious and easy to grasp. And these are more sophisticated models, and we are seeing some aggressive regulation on the back of that. Right, and so the pendulum is swinging, and obviously there's collateral damage. And that is a concern as to where that collateral damage will stop and how we are going to go through this experimental process to reach a point of equilibrium or stability is something to be seen. And we are all, and I think Sanjay and Shripati and all are great champions of working with the regulation and ecosystem across markets. We are also trying to do whatever we can do best to the extent that we can work with regulators, but it's super important to ensure that the ecosystem health of ecosystem is preserved.
Yeah, awesome, thank you. So we have
I was just going to add a couple of specific things which are on the positive side, right? I think in September, we had the DLG guidelines that came out, right? It's really the first time the regulator has formally acknowledged that fintech has a role, right? Earlier, we were regulated entity or non-regulated entity, right? But to say that an LSP or basically a non-regulated player can provide access to customers and can underwrite up to 5% on the DLG guidelines, right? That is really saying, I do recognize the presence of a fintech, right? It's a very big milestone. And the second thing was also around, turning on Razorpay and cash free, right? As payment gateways and, as payment aggregators. I think these are some good steps here. I think we have a regulator that, while cautious and while wanting to ensure that the governance and the protection is in place, actually recognizes and acknowledges that fintechs have a role to play, and in driving mass adoption of financial services. And as long as it's aligned with the gaps in the offerings today to drive financial inclusion, I think we'll see positive regulation and more forward-thinking regulation.
Awesome. So, folks, we have a lot of founders or people who are ideating on new things in the audience. So this was very helpful as you look into 2024 now. What we've summarized, I took away basically 3 themes from what Sanjay and Ganesh talked about, right? One is public markets corrections leading to effectively, in fact, healthier performance, including the likes of Paytm. The second is fintech truly having to confront tech and not just be built like an e-commerce business. And third, a lot of activity on the regulatory front, both, for consumer protection with some collateral damage, but also clarity and recognition, right? So that's a good segue into sort of, if you're a founder now thinking about building in the space, what are you excited about? So what we are going to do, folks, is the following. We've just broken it down into the 5 usual buckets. Used to be payments, but I'm just going to call it payments and credit, because my first question there will be, is payments already done? So payments, credit, one. Next, digital public infrastructure, including things like account aggregator, ONDC, etc. Third is investing and personal wealth, finance, whatever you want to call it. Fourth is insurance. And fifth is everything else, banking as a service, infra that still might be missing, and to the extent that some folks may still have questions on blockchain, Web3, etc. I don't think we'll cover everything in great detail, but what we'll do is go through each of these 5. And I'm going to ask both of them, what are the biggest learnings this year? How has your worldview changed? And what is a white space or a gap that you think, if you were trying to tell a founder someone should go after, what would those be? So starting with payments and credit. So first of all, for the last so many years, with so many payment startups, payment gateways and aggregators, etc., is there still anything to be done on the consumer payment front, folks, or it's outside of B2B payments maybe? Is there anything that you still think is left to do?
That's for the entrepreneurs to show us, buddy. There will always be, right? Also, obviously, it's never going to be a status quo, right?
Sure.
I think the real opportunity is for an entrepreneur to look at something and say, look, I think this can be a force multiplier. It can be a 10x better implementation. We have a few things that we can do better, and it's a large enough opportunity. And then that's, it's for us to really. So if you ask me right off the bat here, it would seem like we've had such a big step function jump in the adoption of digital payments in India in the last 5 years, that for the foreseeable future, we're probably going to be digesting it. But if you notice, NPCI just increased the limits of UPI from 1 lakh to 5 lakhs and things like that. So that's probably going to open up a whole new category of payments that are going to be possible on UPI. Now, are the existing guys just going to be the ones doing it? Is that going to create new possibilities for fraud engines that need to be, that need to come into play? I don't know, right? But it will open up a whole new category, like jewelers probably will now be able to accept payments through UPI. So on the acceptance front, on the risk management front, just the movement of the money might not have a lot more innovation left. But I think the making more and more use cases mainstream and verticalization of solutions around them will absolutely continue to evolve. On the back of that, as more digital data and digital exhaust starts happening, lending, whether it's secured lending, whether it's invoice discounting, whether it's unsecured lending, I think we're still highly underserved in this market. I always jokingly say there are 3 kinds of customers in financial services. There's unserved, underserved, and poorly served. So I don't think any of us is happy with what we have, right? So there is always going to be innovation possible. And with mobile and with artificial intelligence and ChatGPT and things like that coming together, I think experiences will change, right? So I still think that there is a lot more that can be done, but it's really up to the entrepreneurs to have the brainwave and to innovate and here to support them.
Ganesh, your thoughts, and also since you look at innovation globally, is there a product or something you feel like India will see soon on payments? And we'll move to credit in a second also, but anything on payments?
Yeah, so again, at the cost of making some provocative statements, I'll start by saying, if we had if we had thought of life differently and been very open, a lot more open ecosystem, with what we have done with UPI, we would have been on our way to building the next Visa and Master in the world. Unfortunately, we didn't. Our approach was a little different. It's longer discussion we can have some other day. But having said that, I think the technological foundation shows what it could have become and shows the power power of real-time payments and integration, and the gap that exists both in digitizing cash and in building real-time payments infrastructure for across use cases. I think we have proven that there is lots to be done. There are parts of world which are catching up to this. On a scale of 0 to 10, in tech sophistication, we are at 8 out of 10. In business model sophistication, we are probably at -1 out of 10. And that's because we built a business model and we have made the country Groupon, right? And now we're trying to recover from Groupon. So I really think we need to rethink this. But on tech sophistication, the world is really learning, right? And we are at 8 or 8.5 out of 10, and there are folks who are at 2, 3, 7, 6 in that range. Hopefully, the business model appreciation will catch up, because eventually, if you take payments and the discussion I've had with so many folks, including some of the very open folks in the regulatory ecosystem, saying in a typical credit card ecosystem, you have an issuer and an acquirer, right? And at best you have two banks. Actually, in the new paradigm, QPI, you could have up to 4 banks, right? And by the way, when it comes to processing, fraud, AYC, KML, or authorization, clearing, settlement, and I started my career in clearing at Visa, like ages ago, at the turn of the century. They are still the most valuable fintechs. It costs a lot to keep this engine going around the world. So I think the approach we took to business model was kind of disappointing. We could have fixed that. But I think we are evolving. Having said that, I think there is a digital infrastructure and financial infrastructure that is being fundamentally rewritten. In the country, we are well ahead of most parts of the emerging world, and in several cases ahead of some of the mature and developed world as well, because those systems are hard to change. Right? They're not easy to change the way we are building something new. It's hard to change something well entrenched.
Yeah.
So the digital and financial infra is fundamentally being rewritten, which means a lot of things will change from the way they were done. Everything will change. Is it going to be 5, 10, 15 years? We'll see. But it is going to be changed. And that's where the point Sanjay made of it's up to the entrepreneurs to see the opportunity comes in. The second point I'll make there, and stop with that and happy to go deeper into this, is we also believe, we were probably not as smart as number of folks around the ecosystem, because we did not believe in payments for a while in India. While the ecosystem was settling down, there was lots of complications on what is, a lot of confusion on what is public, what is private, where will it settle, etc. I actually believe this coming couple of years will change that, because we have a lot more stability and understanding on the infrastructure, and fundamentally the experiences will change, as I said, plus the fact that I think we need to look at payments as an integral part of a holistic solution. I think there has also been, honestly, a lot more, and sorry, statement number 2 or 3, provocative, I don't know which one, I'm not counting, but I think there's been over-obsession across the ecosystem on payments as a technicality, right? The reality is payments is something you need. How do you integrate that into a holistic solution? And like Sanjay said, you start seeing vertical solutions, right, which provide holistic solutions for a use case around certain verticals of commerce and so on and so forth. And payment is a lever to be able to do that more effectively and provide other solutions. That's kind of where we really believe the power is, to leverage the new age infra of payments versus very, very specialized payment solutions and the entrepreneurial opportunities we have been seeing in the few quarters.
So Nitin, I want to come back to something you just said, like, except for, right? And B2B payments is a huge sector, right? Yeah. So that is certainly an area where we're going to see huge amount of both opportunity and innovation. And with the UPI limits being increased, until now all B2B payments had to be sort of, NEFT based and things like that. Now, all of a sudden, you can have much more sort of real-time experiences around B2B payments as well. So that, I think, is an immediate near-term opportunity. So I don't want to say, like, apart from that, because that's actually a massive opportunity.
Yeah, and I want to pick up on what both of you said about verticalization, right? Payments is a part of a holistic system. And I think B2B, the solutions out there is actually fitting that very well, right? Because most of what B2B payments digitization has to happen is in the context of the workflow, etc. So any further thoughts on, if have you felt like, okay, there is some vertical or some B2B payment solution that is a yawning gap in India? That's one. Second, I'm looking at the questions coming in. A bunch of people are asking cross-border. And we also saw a number of things this year. Suddenly there was a surge of people working on cross-border. So B2B and cross-border, if you could please comment on those.
Maybe, okay, I'll take that. So I was going to answer your first question by actually they're saying the second, which is cross-border is a space where we have been looking at very deeply, especially because that also kind of lends itself naturally to what we do. And in some of our other markets, I would say especially LATAM, we have seen I would say a lot more of a progression on cross-border models. For example, especially leveraging like China plus one. Like Mexico has become a lot more of a nearshoring opportunity, and we are starting to see how integrated solutions are being built, whether in terms of marketplaces that are building brands into the country and providing holistic solution around that, including financial solutions, whether it's insurance, forex, payments, credit, payables. I mean, the whole host of things you can do, or folks who are providing dedicated holistic solutions to importers coming to the, and there are a bunch of things around that. So cross-border as such, the challenge in India is not challenge, but we have been more domestically focused because we are a big domestic economy. That the opportunity is evolving now. There is a real opportunity, and also sophistication is lower in providing solutions to make it more seamless. And hence the opportunity is that much bigger and can be built cleanly on top of the new rails which have come up, as opposed to having to deal with changing legacy to a large extent. So it's a massive opportunity. We are definitely excited about number of potential use cases and models there.
And we've seen some similarities here in India as well. I think a good question is, will the big guys just do it themselves, right? Because we do have fairly strong, I mean, we mentioned a few of their names earlier, the payment gateway companies serving the mid-market customers here, right? And, will they leave that gap, or will there be an opportunity for a startup? Time will tell.
Is moving
I
to
could look at several other things, right? This whole, healthcare claims management, reimbursements, real-time reimbursements, employee reimbursements, right? Vendor payments with SMEs. These are all still very broken, right?
Yeah.
Just because somebody has attempted to do a version 1 of this product, and some of the companies in the past that we had also back attempted it, that doesn't mean that it's solved. Business report, expense management, all of these things, right? So that's why I said, it's unserved, underserved, and poorly served. Some of these segments are poorly served. So those are still opportunities. And sometimes in these businesses, timing is everything, right? So just because something did not work in 2019, digital payments were sort of nascent at the time. Now digital payments are much more well established, well accepted, right? And smartphone penetration is at 800 million users when it used to be at 50 million at the time. So sometimes timing plays a very important role, and I would urge founders to think about some aspirin problems here, right? Not the vitamin problems of saying, the rich people need to have, that extra 0.2% in rewards. It's actually the aspirin problems where people will be willing to pay. And just because something did not work 4 years ago doesn't mean it's not an opportunity today.
Yeah, for sure. So my takeaways from the payments part, there is tons of activity still pending. I think, as Sanjay said, moving from the transaction to the product, the whole cycle, risk management. I think, as Ganesh said, maybe even reimagining the acquirer issuer framework, especially in a more open sort of context. Clearly thinking much more vertically, B2B, especially in areas like healthcare, perhaps, and a lot to do on cross-border. Moving to lending, is credit on UPI right now the biggest idea in Indian fintech?
Credit on UPI is
or the most hyped?
Bluntly put, I think it's stillborn, to be honest, right? We have messed it up by bringing in the RuPay card into play. It had no role to play in this. It's okay to support it with the RuPay card, but there is no reason for that. If you ask me, we should have allowed credit on UPI to have just been that, credit on UPI, right? I mean, it's today I can pay with my bank account. Tomorrow I can pay with the account that, Ganesh has created for me, where he's, where I have to pay him back later, right? The fact that, I now have to actually get a RuPay credit card and I need to attach that to my thing has just complicated matters. That's not to say you shouldn't do it, but that shouldn't be the only way to do it, right? So I think it's still, that is one big opportunity. I don't think we have figured it out. Maybe I would say perhaps one way of looking at it is that this is version 1 of it that's come out, and being conservative about it. But I think realistically, there's a lot more to be done for credit on UPI. There is point of sale based credit on UPI that could be done. There could be post sales credit on UPI that could be done, right? I mean, imagine I go and I buy a TV and I pay for it with UPI, but when I come back home, somebody can say, hey, would you like to convert this to an EMI, right? And maybe I've paid 70,000 for the TV, 20,000 will be a down payment, and the rest 50,000 gets converted. So there's a lot of interesting possibilities there that could be done, and that's where the NBFCs and the others could come into play here. That's actually an interesting idea in itself. As I think about it, I just thought about it on the fly, right? So maybe Ganesh, we should get any founders, put up your hand, Ganesh, and I will talk to you. Right?
Yeah, let us
anyway,
know.
these are a variety of these opportunities, right? That will work in India, right? Just because the model did not exist elsewhere in the world doesn't mean that it can't work here. And I think the penetration of credit is just so low, whether it is secured lending, and of course, unsecured it is what it is. It'll keep growing organically, and those who are very, very credit worthy will get a disproportionate share, which is where RBI is trying to put some boundaries around it. But I think unsecured lending is still the biggest opportunity, and we've seen a few of our portfolio companies, and there's just no end in sight of how big they can grow because it's just a very good asset class and it's still underserved. Right? Not to mention the whole B2B credit side of things, which we'll come back to in a second.
Ganesh, is there a devil's advocate statement number 3?
No, I think it's hard to refute because we are big believers in credit. I mean, we have probably invested in 4 cycles of credit. I mean, individually, personally, and as Quona over the last 15 years. So and there are multiple variants, right? Starting from microfinance, invested all the way to the latest consumer fintech model. So of course, we're believers in credit. The gap is still very huge. I agree with Sanjay. I think what we are seeing more and more now, or rather, let me put it this way: what we are looking for more and more are credit models that are integral to, again, a more holistic solution where you are not a transactional credit player only. Because we feel that it's becoming more challenging just to be a transactional credit player, unless you are, of course, fully regulated, packaged, everything. And credit in the context of a holistic solution for a certain vertical where you have a right to win, you have better understanding of the customer because of the full stack, makes a lot more sense. And I can give you multiple examples. Like we have companies like Arya, which is a full stack post-harvest agri platform. It's the largest post-harvest agri platform in India, and they do farm gate aggregation to warehousing to collateral management to financing to market linkage. They're profitable, fairly scaled up company. And the reason they have right to win in credit is all the things they do before that, including the warehouse management, because of which they can do collateral management and financing. And some of the largest banks in India work with them to provide financing on balance sheet and off balance sheet. So one example, there are lots of different variants to this. We can go into accounts payables, receivables space and talk through that. We can talk through supply chain. We can talk through logistics and trucking. There are like a bunch of areas where this is possible, but we are looking for those more integrated models, which are harder to create. Because you have to stitch together a whole bunch of things. It's not easy to do that, as opposed to transactional credit, which
seems like both across payments and credit. Seems like that is almost like a theme, that more vertically integrated, more full stack products and experiences. A couple of questions from the audience on I think AI in lending, and obviously anything really is being talked about. And another question around what enablers are missing, let's say on the data layer. And especially when you talk about sort of more full stack, it begs the question, will there be new types of enablers, data marketplaces and things like that needed in the future? But somewhere, it's a broad question. Where do you see something very quickly on the AI or the enabler front?
So I think maybe to start with, right? The controversial areas people are concerned about in AI have to do with decision making around lending and stuff like that, right? So I think that will still be a few people might do some pilots here, but I think one doesn't have to go there yet. I think in every financial institution in the world, and India is no exception, customer onboarding is broken, customer service is broken, ongoing, like you think of every single interaction with the customer, And I think tools like, ChatGPT or, other frameworks that you've got are showing that one can give a much richer experience to the consumer, right? I recently did my annual medical checkup. There was something that showed up. I went to ChatGPT and saying, the doctor said, yeah, you don't have to worry about it. It looks fine. But when you go to ChatGPT, it explains it to you and then it says, this is why it is not concerned, right? I think when it comes to looking at even our bank statements, reconciling our transactions, giving me a nice dashboard of where my money is going, where am I spending. Now, today, I haven't been to an ATM machine in 4 years. Now everything is done on UPI, right? There are ample opportunities there to, give me some detailed analysis, etc. And there, I think all of these tools will come into play. Right. So we don't have to wait for, we all get very excited about, oh my God, this thing is hallucinating, this thing is doing this, it's going to reject, poor are not going to get more access to credit, etc. We don't have to go there, right? Can we serve actually the underprivileged better by talking to them in a language of their own? Can we talk to them, explain it to them better? Can they click a button and get better understanding of what it means to be rejected for a loan? What can they do to improve it, right? Today, it is impossible at the current cost structure at the state of the art of technology for people to be able to serve this customer base. The easiest thing to do is to reject them, right? But if you could engage them into a dialogue through technology and actually give them the guidance and the governance and the not governance guidance and the roadmap to becoming credit worthy, for example, right? So there are ample opportunities here to apply all of these new technologies. And I think the holy grail of actually using it for the credit underwriting process can very well be 5 years away. I have no idea, right? Or maybe 5 months away too. But we don't have to go there to use these technologies.
Yeah, I tend to agree with Sanjay. I think there are lots of efficiency areas, as you suggested, that this will tremendously enable us. But I think in terms of
and there's collections also, right?
Yeah,
that's the other part.
Exactly. Right. And by the way, in some ways, in maybe some small ways, or in some cases, very efficient ways, it's already being used over the last few years, right? So, but a paradigm shift because of AI, in terms of fundamentally new models being run by AI, I think we are quite some distance away, and I frankly I have no idea how it's going to shape up and to what extent it will be allowed, because there's clearly a balance right here between what should be allowed and what not.
Actually, both of us have a company that is now in the RBI sandbox, right? These are that is a really great thing that RBI has done also, right? So we can pilot some of these new initiatives, through a sandbox mechanism, and that's an opportunity as well for founders to prove out their models and validate them before they can go mass market.
Fantastic. So I was going to go to insurance next, but because you mentioned personal finance, especially maybe beyond the same 2 crore people that we always talk about, a couple of questions also came in. So is there, one of the things that in an idea came in the next 100 thing was, how do you create personal finance for bottom of the pyramid? And I also see a couple of questions on that. And, what about micro lending apps like Fintech chatbots, etc.? Have you, when we think of personal finance beyond sort of the Zerodha and Grow and, the usual suspects, that seems like a massive white space. Sanjay, you touched on a little bit of what AI could do in vernacular languages, especially, but could you, what more do you think, or have you seen people start working on these kinds of things yet?
So very loosely, it's a massive opportunity space, right? 90% of the people, I'm sure, even on this panel, certainly myself, when I say on the panel on this thing, have not had any formal education in how to manage money, right? It's the one skill that's needed, whether you become an engineer or a doctor or an artist or a lawyer or a philosopher or whatever, that we all need. And there's nobody doing that, right? I mean, I've been looking very hard for companies that want to do this as an education, right? Like a co-curricular activity in school. If anybody is thinking of working on it, please drop me a note, right? I mean, it just doesn't exist anywhere in the world. Nobody's been taught, right? Even I have no idea when someone says, oh, they're going to convert this, they do this, then they're going to make a bond out of it. I have to scratch my head saying, let me go back to Wikipedia and say, what exactly is a bond, right? I mean, we just aren't taught all these tools. So none of us knows really, what is the impact, what is the importance of having a credit score, how do you improve it if you have a bad credit score? Why should it be you be disciplined about it? Why should you when should you put money in an FD versus putting it in a mutual fund versus putting in things, right? So there's ample opportunity right there across all segments, even the so-called financially included, really need that. How do you manage it? All of us sort of have some random bank account, some wallet that we opened here, this we did there. We don't even have a proper view of what money we have and how it's been doing and so on, right? So I don't think anybody is really organized here. We've got tools, right? But how do we, nobody's got solutions for us, right? So that's one big opportunity I see. The second is given, of course, now with account aggregator and all of these accounts sort of feeding into account aggregator, if you ask somebody what's your net worth today, nobody knows, right? And then the ballpark they will know, but they really don't. If you ask them, they'll have to scratch their heads and dig around a little bit and look for it. So I think these are basic requirements that everybody has got. Obviously, as you get a little older in life, it becomes more important. When you're younger, you think that whatever I made is nothing anyways. I'm just going to make so much in the future. So that's one aspect, whether it's from a literacy point of view, whether it's a management point of view. I think what we have today are good transaction platforms, right? And there will be a few others. We've invested in one, which is doing futures and options and stuff like that, which, all these opportunities. So the transaction platforms, the money management platforms are one, but the literacy and the visibility and the analysis and all of that, we've got a long ways to go on wealth management side. And that's also at a personal level, right? Now one could argue that, well, maybe my wife and I need to have a joint account or a joint view of our portfolio, things like that. When you start looking at it, I think there is so much sophistication that could be put into this. We are just starting out here.
Ganesh, anything you've seen you're obviously also an impact fund. I'm curious if you've seen any new models across the board.
Yeah, I think I would say, and maybe this is a thought a lot of folks here may not subscribe to. One is this definition of PFM has been very ambiguous, right? And the narrative has been probably stolen by the classical high growth wealth tech models, which, with the exception of maybe not even handful around the world, have just been fundamentally not sustainable models. Whereas in reality, it probably encompasses a lot of things, a bunch of things Sanjay spoke about. So it has probably not been thought about in entirety, because those models have kind of stolen the march over the space as a whole. So, and we find that, and a lot of things, it is hard to back stuff that doesn't exist. Just you can't. And the entrepreneurial narrative also has been stolen by those companies, and it continues to. Version 1.0, version 2.0, version 3.0. So that is one reason we are frankly not super bullish about this space. Right? And the flip side of that is exactly what Sanjay said, that the gap is just absurdly massive in terms of understanding, embracing, everyone needs this. And because the gap is at a point where we are at base level today, it's also something which we believe will be hard to do in an automated way. It requires meaningful intervention to help educate people, understand what they need to do, expose them to some of these solutions. So we completely believe in the gap, need, and opportunity. I think we have struggled, and I have struggled to say how far are we from a place in terms of having building blocks that will lead entrepreneurs to do something in this space, and when will we get over the over the hype models which have largely stolen the march.
So just as an aside, I wanted to ask you, I think in 21 and 22, we saw this new behavior with like JAR and micro savings. Just curious, have you seen any new consumer behavior develop, particularly in the last 1 year, that you think is, or just taking off, or could happen next year? Any new consumer behavior or product in the personal finance management or savings space?
So there certainly have been a few save now, pay later type companies, right, approaching things quite interestingly. So that's one area that we still think that there can be some interesting possibilities. We've seen people sort of gamify, lottery/reward type thing. I'm not sure that necessarily will be long term. I think gamification is another one that we have seen a few things, but nothing gamifying savings, right? Driving you just like you have healthcare type gamification, savings gamification is another one. I think so far, the most of the focus has been targeting sort of the young crowd in India that is getting credit worthy and that has a high income growth, and therefore most of the solutions have been credit led. I think savings is a big opportunity. Investment is still a big opportunity in that segment. Always looking.
Yeah. Anything you've seen,
Yeah.
Ganesh?
A couple of things I'll add. One is we are starting to see more relatively more integrated consumer behavior across online and offline. It still has some way to go. But models in the past have been either online or offline. It's changing. I mean, obviously, models are also evolving. But I think the consumer behavior is now start moving more rapidly than we've seen in the past. People are getting more comfortable, kind of themselves operating across, and that applies across a whole bunch of use cases. So that's certainly one which we are seeing interesting trends from an awareness and adaptability point of view. Across a whole bunch of this areas that we spoke about.
Awesome. So I think in
I just wanted to talk a little bit more on the SME side of things, Nitin, right? And actually more on the lending side of things there, right? I don't know if you were going to come to it.
No, please go ahead.
But this is a massive opportunity, completely underserved. Ganesh has Rupify, we have got, Finang, a couple of others that are there in our portfolio, Credex, for example. I'm sure there are others in your portfolio as well, world over. Companies that are doing secured lending for, factory equipment, for, solar panel financing. There are companies that are moving the industry from diesel directly to solar, right? And with an NBFC type structure, etc. Right? So there are companies that are doing cash flow based lending for for retailers, secured by relationship with the business, with the brand. There are companies that are doing unsecured lending to retailers, underwriting them, with much more sophistication of digital. So the one we recently announced, Navdhan, for example, is an NBFC that is doing co-lending. Co-lending is a big movement in India, right, where the regulator has sort of mandated almost, or certainly encouraged banks to co-lend with NBFCs rather than just throw the money over the compound and say you figure it out. So be involved in the process, and that's led to a lot of infrastructure opportunities within the banking system, but will also lead to a lot more opportunity, right? So I would encourage founders to look at some of these business opportunities which are perceived as boring, but which are extraordinary opportunities, right? And the kind of large companies, if you think as a startup, the ultimate goal is to build a lasting company which gets to $70-100 million of net revenue, 30% EBITDA, goes public, continues to build, right? I think there are ample opportunities in this space, right? And they might not sound quote unquote sexy, but they are very attractive startups.
No, I fully agree. We have not announced it yet. We have an investment in a company called HealthCred, which is focused on lending to smaller hospitals. Finverve, I think you mentioned embedded lending as a trend. Of course, it had its own slowdown because of regulatory reasons in some cases, but clearly a massive theme. And then P2P lending. In fact, there was a question on that as well. We have a company called India P2P. I'm sure you have invested in a number of P2P lending platforms. Do you see something dramatically new, different next year? Or is that is the sort of overhang from P2P experiences in the past going to continue?
So we have never invested in anything P2P. Personally, I'm not sure I understand it well, or that it is sustainable. I've seen a few companies doing very well, and certainly if you look at Cred and perhaps BharatPe had introduced their 12% club and things like that. There's definitely an opportunity because there's an arbitrage there. But we have not done anything in that space, so I won't comment on that.
Ganesh, what do you think of P2P lending?
Yeah, it's interesting because in our case, a lot of the lending companies in India obviously are regulated, or work closely with regulated players. Within Asia, the two big lending pockets for us have been India and Indonesia. All our lending portfolio companies in Indonesia are P2P.
Oh, really?
Because that is the license that you have as fintech lender, and the whole ecosystem has developed around it. But P2P doesn't mean it's classical P2P. It started that way. Today, 60+% of their lending, and this was one of the big things that we've all done once we came in as shareholders, is to bring institutions, do co-lending, have your own structures to take wholesale capital to be able to lend, and then also do P2P. But P2P has developed in this market because they have succeeded in converting it into sort of an investments and savings plus kind of instrument, and also created a robo advisory mechanism. But most importantly, it happened because the regulator said fintechs can only be recognized as P2P under the P2P regulation. So the regulation supported it and the folks were comfortable with it. I frankly have struggled in India, like Sanjay, given all the options we have on where this will fit in, and especially till it gets a solid regulatory blessing. The challenge now is someday it might happen, but this has been around for so long and it's been so hard to kind of pin down regulation that that I'm doubting if the regulator really is mentally behind this model, right? And in the absence of that, I don't think we understand how it will work. It's not about finding arbitrage and gaps. I think that's one thing folks have to understand about financial services, right? Like commerce, supply chain, other sectors, you can find arbitrage. Here, it's not about arbitrage only. It's about finding a gap where you respect how the regulation is going to be and play accordingly. Be within the system to change the system. You can't just find an arbitrage and start creating your own solution without knowing what the repercussions would be if it scales in terms of the concern that regulator might have. And number of entrepreneurs, I think, miss that beat when it comes to financial services. And it's also driven by how the venture ecosystem is, right?
That's very well said. So
From
I've
that perspective, I would advise founders also, right? Try to understand the spirit behind the regulator's decision making, right? And don't fight that, right? Because actually what will end up happening is if something you're doing is not necessarily kosher, but is in the spirit of the regulation, right? You can actually talk to the regulator, maybe get a sandbox opportunity to prove that this is actually pulling in the same direction that the regulator wants to go, right? And that is an easier conversation rather than trying to do something that is orthogonal or opposite to what where the regulator is wanting to think, right? Priority sector is a very important thing. There are huge problems to be solved there. It is important for the nation to get that addressed because that's how we're going to get to a $5-10 trillion thing, right? So finding out new jugaad ways to lend to the guys who have got ample access to credit is not in the priority list for the regulator, right? So if something there is in the gray area, it will either be ignored or shut down. But if something in the priority sector is in the gray area, the regulator will look at it with an open eye and say, well, this is actually solving the problem. Maybe I should allow it, right? So that's important for founders to think about.
I think there's a huge gap in like you said, in understanding the intent. For all the complaints we have, our regulators have actually, in a holistic sense, done a lot of things right too. I feared we would run out of time. I'm sure we will, and many more topics. We've covered quite a sweeping array of things, but I'm going to have two last topics, folks. One is insurance, statutization, micro insurance. We've been talking about these kinds of concepts for a while. And the second would be ONDC, but let's start with quick reactions to what's most exciting in insurance next year.
So fundamentally at Prime, look, we have been very interested in product innovation, right? And so far, we have not seen anything around product innovation. The only thing we've seen in insurance are either licensed resellers, right? In which case your CAC is a big issue and you need to have some differentiated distribution. Or we've seen the two big ones, which, is certainly out of our league in terms of the types of companies, which is getting a license yourself, right? Having said that, in the recent past, I think we are starting to see the regulator offering much more flexibility or working with those who are more digital first insurance companies, whether it's a Digit or an Acco or something like that, to come up with customized solutions for verticals. And I think things like whether it was the example of Ola adding 1 rupee, whatever the insurance for the ride, so that you don't miss your flight or your missed flight is covered. That's an interesting one. Similar things around whether it is around employment, around healthcare, around education. They might start to see education loans things like that might start to get quite interesting. I have not seen anything that I feel that is moat-worthy, right? Maybe I should write a blog on noteworthy versus moat-worthy. And I think the day we see that, we'll be very interested, right? Always happy to talk to founders, but we have to worry about moats in this business, and just being the first out there is probably not enough.
Ganesh?
Yeah, space we do a lot of work in, and we have a bunch of global insurers who are also investors in Quona. So it's a space across markets. We are active in India. Of course, the most active and recent investment is on Surety, which is probably the first MGA model in India. It's kind of where co-lending was 5 years ago in credit, right? And yeah, co-lending, I actually maybe just saying it's co-lending is not fair, but basically where you run a full stack and you take risk with a license that leads to you, sort of thing by the big boys. It will evolve. But we have portfolio company called Sunday, which is the largest licensed insurtech in Southeast Asia across a couple of markets. So like Sanjay said, it is a more capital intensive model, but we have gone that way because we moved away from distribution, and we wanted to really invest in insurance while waiting for the creative product models, which weren't happening at least in the last couple of years to the extent that we wanted to see. Now, I think we are seeing three trends. One is, I think embedded insurance is picking up. Is picking up and picking up actively, and we will see players who will not look like manufacturers, who will not look like distributors, but could become classic product innovators in delivering embedded insurance. We are seeing that happen, and we'll probably see more of that. Second is, as a part of that, yes, micro insurance, being able to provide micro insurance in a cost-effective way while managing the risk is going to be the challenge. It's not the micro insurance itself, but the sachet has risk and sachet has CAC and servicing. So how do you do all of this within the sachet? But can it be a company on its own, or it's a product which has to be embedded within a company is to be seen. The last part I would say is full stack models are moving to hybrid stack models now, which I think are more efficient models. Because once you establish yourself as a platform that can do full stack, you don't need to then necessarily do full stack. If you have market recall and branding and customer connect, you can actually start plugging in third party to become more efficient across some pieces of it. It could be some TPA services, it could be some certain specific KYC services, whatever. But that hybrid stack actually ends up being more efficient model, because in the absence of that, a full stack insurance model is extremely capital intensive.
Yeah.
Right, and not something that startup can take up lightly.
Which is an interesting segue when you talk about unbundling. To my last question, ONDC, we are obviously very bullish, so and a lot of people in the audience probably have followed that. But very curious from a slightly later stage investor perspective, do you have a view as to what might be the most interesting thing coming out next year from that?
I think transportation is probably going to be the first, right? Because if you think about ONDC, if you look at commerce, for example, it's probably the most complex problem to solve, right? Because you have a combination of yes, in most cases they're commoditized products, but there are multiple steps here, and closing the loop is always going to be a challenge. So I think we'll continue to see a lot of pilots like we've seen in Udupi and things like that going on. But I think in terms of transportation, where we've seen Namayatri here, this company Yari that we're seeing in Hyderabad come out, and a few others as well. I think with transportation, what is interesting is supply is one thing, and then on the demand side, the transaction is fulfilled immediately, right? So this whole risk of I might place an order, and the shopkeeper might give it to the delivery boy, but the delivery boy is from some other company, may not come, or we may not find a delivery boy. That ambiguity is gone away. So I think that is the first use case that we'll see that could hit scale. And in Bangalore, we've already seen at the auto rickshaw level, despite the recent issues that they've been debating or discussing. It has the best potential. I think in terms of all things digital financial services, I think, there's now, framework for it as well. It remains to be seen how much of, plug and play there needs to be in financial services and who's going to take the lead there. Because it's anyway generally digitally delivered, right? So does the interoperability play such a massive role? I don't know yet, right? Time will tell. I think the longest gestation is likely to be for physical commerce related stuff, right? Or e-commerce of physical goods. I think that's probably the sequence in which we'll see it. There may be some e-commerce of other digital goods, whether it's music or something like that might also come in earlier.
Yeah, I usually try to escape before a question on ONDC comes. No offense. And last time, also when I did something like this, the last question was on ONDC. So I'll be a lot more polite this time because I've learned.
No, please don't be. I'd love to hear very contrarian
I,
views.
I think commerce is a very complex problem. I worry about taking a DPI-ish kind of view to solving commerce. And like I said, in UPI, I just hope we wish we don't make the same mistake we did in UPI. Business model, sustainability and innovation is as important as providing an open architecture and platform. I think we need to have some faith in the market. My big concern on the DPI stuff we keep rolling out is we just believe we have to dictate everything, right? We cannot treat adults and college kids like they're kindergarten kids and spell everything out and say this is the only framework within which you can operate. That will kill enterprise initiative and startups. So we need to we are creating platforms and solutions for sustainable fundamental shift in the country. That would mean private enterprise has to come and build on top and create that sustainability, right? We are not going to do everything as DPI. So I have a fundamental concern, and e-commerce has been the toughest space. I mean, there are tens and billions, maybe hundreds of billions that have gone into it, and only few have created, a part of it has created value. So when we are attacking that as DPI, I mean, we are taking on something significant. So I hope, and again, this is very generalized comment, right? I just hope we learn from what we did, the last decade, and help also create clarity in business model innovation or business model sustainability before we sort of roll out some meaningful diktats. Aside from that, I agree with what Sanjay was saying in terms of the possibilities.
One thing I will say, Ganesh, is on ONDC, it's a lot less prescriptive. There's still some sort of guidelines on pricing, but it's also meant to be sort of initially just to get it off the ground. So, hopefully there are less reasons to be concerned here.
Ganesh, for a second, I thought I was listening to the Web3 Pro when you were talking about permissionless innovation, and I've been a fan of that as well. But everything is just such a mixed bag. Folks, this could easily be a 3-hour session. Obviously, we didn't expect to answer every question on fintech. Thanks to the 120 plus that joined, and 80 plus is still here, and 30 some questions. Sorry, we couldn't get to all of your questions. What we'll do is the Antler team will try to answer some of them. So thanks for joining. I think that all the founders here, if perhaps some got some new ideas, problems to think deeper about, but I think many of them probably will walk away with a lot more clarity on some very key philosophy shifts that need to happen, and some very important the trends that are here to stay. So thank you, Ganesh and Sanjay. Thank you so much for taking time out.